Welcome to Global World Watch. Please subscribe and press the bell icon for more updates. For decades, the global economy has relied on oil, and oil has relied on the US dollar. Nations everywhere need energy, and oil has been the world's most vital commodity. Almost all global oil trade has been conducted in dollars, creating a unique link between energy and America's currency. This wasn't inevitable. It was a result of a historic deal in the 1970s. After the US left the gold standard, it struck an agreement with Saudi Arabia. Military support in exchange for oil priced exclusively in dollars. Saudi Arabia would also invest its oil profits in US government bonds, recycling petrodollars back into the American economy. Other oil producers followed, cementing the dollar's role at the center of global finance. This system gave the US economic advantages and powerful leverage in global affairs. If a country wanted oil, it needed dollars, reinforcing the dollar's status as the world's reserve currency. The petrodollar system became a strategic pillar of the post-war order, financing US deficits and keeping interest rates low. But today, that system is showing cracks. The world is changing, and the foundations of the petrodollar are eroding. New economic powers are rising, and oil exporters are exploring alternatives. The exclusive link between oil and the dollar is no longer guaranteed. Countries like China are pushing for trade in their own currencies. Oil producers are diversifying their partnerships and financial strategies. The petrodollar's dominance is being challenged, not by sudden revolution, but by gradual evolution. The global energy market is entering a new era. The dollar's centrality is no longer unassailable. The consequences will reshape international finance and power. The world is watching as the old order slowly unravels. The petrodollar era is fading, and a new chapter is beginning. The petrodollar system has been a cornerstone of American power, yet few understand its true impact. By making the dollar essential for oil trade, the US created a built-in global demand for its currency. Central banks worldwide stockpiled dollars to buy energy, keeping the dollar strong and US borrowing costs low. This financial advantage fueled American prosperity and influence. The system also gave Washington unique geopolitical leverage. Most oil deals clear through US banks, enabling America to impose sanctions with global reach. This power has shaped the fates of countries like Iran and Russia. Oil exporters, flush with dollars, invested heavily in US Treasury bonds, financing America's deficits. But this reliance creates vulnerabilities. If oil trade shifts away from the dollar, demand for the currency could fall, raising inflation and interest rates in the US. The effectiveness of sanctions would diminish. As new powers rise and alternatives emerge, the dollar's exclusive grip is loosening. The shift is gradual, but the tectonic plates of global finance are moving. The world is preparing for a future where the dollar is no longer unrivaled. Saudi Arabia, once the architect of the petrodollar, is now exploring new directions. Under Vision 2030, the kingdom is diversifying its economy and its alliances. China, now Saudi Arabia's largest trading partner, is at the center of this shift. Beijing has encouraged oil trade in Yuan, and Riyadh is open to the idea. Selling oil in Yuan would let Saudi Arabia buy Chinese goods directly, streamlining trade and reducing currency risk. It also offers some insulation from US financial pressure. This isn't about abandoning the dollar overnight. The rial is still pegged to the dollar, and Saudi assets remain dollar-heavy. Instead, Saudi Arabia is adopting a dual-track approach, trading in dollars with the West, and cautiously opening to other currencies for the East. The move is pragmatic, not political. It's about maximizing national interest in a changing world. The process is gradual, but the implications are profound. The kingdom is hedging its bets as global power shifts. The era of dollar-only oil trade is ending. Saudi Arabia's pivot is a response to shifting US priorities. The old bargain, oil for security, feels less certain as America's focus moves elsewhere. The US shale revolution and a less interventionist foreign policy have made Riyadh question its reliance on Washington. The muted American response to attacks on Saudi oil facilities deepened this uncertainty. Now, the kingdom is diversifying its alliances, joining groups like BRICS and the Shanghai Cooperation Organization. This isn't about replacing the US, but supplementing it with new partnerships. Saudi Arabia aims to be a bridge between East and West, not a pawn. The strategy is about flexibility and independence in a multipolar world. Relying on a single currency and security partner is seen as a vulnerability. The kingdom is recalibrating for long-term prosperity and security. Qatar, a top LNG exporter, offers a masterclass in balancing global powers. It partners with Western energy giants, reinforcing ties to the US and Europe, deals almost always priced in dollars. At the same time, Qatar signs massive, multi-decade LNG deals with China, even accepting Yuan for some sales. This dual strategy makes Qatar indispensable to both East and West. It supplies Europe's energy needs and secures China's long-term growth. By trading in both dollars and yuan, Qatar avoids taking sides in great power competition. Its gas wealth is a tool of sophisticated diplomacy. Qatar's approach ensures its security and prosperity in a divided world. The lessened flexibility and balance are key in the new energy order. Qatar is thriving by playing both sides. BRICS, Brazil, Russia, India, China, and South Africa, has evolved from an investment term into a powerful geopolitical bloc. These nations want a multipolar world, not one dominated by the West. Reducing dependence on the US dollar is central to their agenda. BRICS has created its own financial institutions and promotes trade in national currencies. The group's 2024 expansion, adding Saudi Arabia, the UAE, and Iran, was a game changer. Now BRICS includes major energy exporters, amplifying its influence over global energy and finance. For Gulf states, joining BRICS is a logical step in diversifying partnerships. It's not about abandoning the West, but building a parallel track. The expanded BRICS bloc is reshaping the rules of global trade. The world is moving toward a more balanced, multipolar order. China's push to elevate the Yuan is central to the changing energy landscape. As the world's top oil importer, China sees dollar dominance as a strategic risk. To counter this, Beijing launched the Shanghai International Energy Exchange, allowing oil to be traded in yuan. The petro-yuan gives oil producers a direct alternative to the dollar. China has even linked the yuan to gold, making it more attractive to trading partners. For Gulf exporters, trading in yuan simplifies business with China and reduces exposure to US sanctions. But the yuan isn't as liquid or trusted as the dollar, and Gulf currencies remain pegged to the greenback. A rapid shift would be risky, so the transition is cautious. Small volumes of oil are now traded in yuan, with most deals still in dollars. The diversification is slow, but the direction is clear. The energy market is no longer a dollar-only club. The yuan is rising as a new player in global energy trade. The petrodollar system isn't collapsing overnight, it's slowly unraveling. The US is no longer the world's top oil importer, China is. Emerging markets, led by BRICS, now drive global growth. Oil producers are adapting, trading in multiple currencies to suit their biggest customers. This isn't defiance. It's pragmatic business and smart geopolitics. The result is a multi-currency, multipolar energy market. Oil and gas will likely be traded in a basket of currencies: dollars with the West, yuan with China, and others among BRICS. The system is becoming more fragmented, but also more resilient. The shift is driven by deep structural changes in the global economy. The petrodollar's exclusive reign is ending, but the transition will be gradual. The world is moving toward a more distributed and diverse financial order. The slow erosion of the petrodollar will reshape America's role in the world. Less oil trade in dollars means less automatic demand for the currency. Over time, this could make US borrowing more expensive and weaken the power of financial sanctions. America will need to rely more on diplomacy and innovation, not just financial might. But this isn't a catastrophe. The dollar remains the world's leading reserve currency, backed by a strong economy and deep markets. No rival currency, including the yuan, is ready to replace it. The likely future is a world where the dollar is first among equals, sharing space with the euro and yuan. The challenge for US policymakers is to adapt wisely, not resist change. Strengthening the economy, managing debt, and leading through cooperation will be key. The shift in energy trade is part of a larger move toward a multipolar world. America's success will depend on its ability to adapt to this new reality. The petrodollar era is ending, but the US can still thrive in a changed world. The future belongs to those who embrace change, not those who fear it.